Misconceptions about modern banking. Hey guys, welcome back to our channel FinTech. Due to their wealth and power, the world's wealthiest do not have any guarantees of safety. This is why banks have been created to provide them with that assurance. So today we will talk about the misconceptions surrounding modern banking. Make sure to subscribe to our channel in order to never miss a video. Number 5. Central banks decide interest rates. What primary banks can do is ready the minimal hobby fee a banking organization can generate loans at. The banks beneath the device are beneath no responsibility to make loans at this minimal fee and regularly do now no longer. This is precisely what passed off with inside the 2008 credit score crunch, when, in fundamental terms, principal banks had been so anxious about the stability sheets that they refused to generate new loans, despite the fact that the Federal Reserve reduced the short time period minimal fee to close to zero. This caused a scarcity of credit scores across the world, badly destructive financial activity. The primary financial institution may even set objectives for the overall fee of hobby and try to meet them over time, for instance, via means of adjusting hobby fees at the cash it lends to industrial banks. Even on a global level, primary banks have a great deal much less to manage over hobby fees than maximum. Countries regularly are trying to raise cash through the sale of presidential bonds, the hobby fee on which is ready via way of means of the primary financial institution. Number 4. Central banks have enormous authority. First of all, the Federal Reserve, or every other primary financial institution, has no control over credit score organizations, along with Moody's or Standard & Poor's, which decide the creditworthiness of whole nations and may wreak havoc on any financial system. Secondly, no primary financial institution has any strength over the shadow banking system. This consists of entities along with hedge price range and sovereign wealth price range, which might also additionally act as a financial institution. However, they aren't concerned with equal policies. Furthermore, megabanks like HSBC, Citigroup, and Goldman Sachs perform globally, which means that they're concerned with exceptional policies in exceptional nations and may use this to their advantage. The aforementioned establishments manage trillions of greenbacks and aren't responding to the general public past imparting offerings for his or their personal customers. So to mention that a primary financial institution can manage a whole financial system is a gross oversimplification. Number 3. Banks lend out customer deposits. Banks lend out cash from the very loans they problem to customers. Every financial institution has a stability sheet that lists assets, cash the financial institution is owed, and liabilities, cash the financial institution owes. When a financial institution makes a mortgage to a customer, it credits the quantity of that mortgage as an asset on its stability sheet, which can, in turn, be transferred to an account in some other financial institution as a liability. So, even though no new bodily cash is created, a brand new deposit has been created nonetheless, and consequently, new cash has been introduced to the banking device. All banks have regulations on the variety of recent deposits they could create issuing loans. These are recognized as reserve necessities and range with the scale of the financial institution's stability sheet. Central banks, along with the American Federal Reserve, can boost or decrease reserve necessities as wished, relying on contemporary financial conditions. Number 2. Banks alone control interest rates. Credit score organizations have a great deal impact on hobby fees, if now no longer extra than any primary financial institution. The phrase of one of the 3 principal organizations can actually make or ruin a whole financial system. Their scores decide the price of loans to nations, states, and provinces inside one's nations, man or woman cities, principal corporations, or even individuals. The first component a financial institution does earlier than issuing a mortgage is to observe the applicant's credit score to decide whether or not making the mortgage is a secure idea. The decrease a score from an agency, the extra it costs to gather a mortgage, and the tougher its miles for the borrower to repay a mass debt. This vicious debt spiral has ruined a couple of countries with inside the past. And like all principal employers with global reach, credit score organizations are concerned with corruption and lapses in judgment. Time will inform if any principal adjustments are instituted with inside the future. However, that is honestly one vicinity of the economic device that is in principle one of an overhaul. Number 1. Offshore accounts are illegal and hard to set up. Not simplest is offshore accounts absolutely prison. However, they're additionally particularly smooth to install. And no, they're now no longer simplest for the rich. All you want to install an account with any offshore financial institution is the right identification. Recollect that a social security number isn't always required in maximum cases. A passport, a letter of behavior from an expert accountant or economic officer, and a few shapes of evidence of address. In a few cases, a preliminary deposit isn't always even required. Offshore trusts are just like offshore banks. However, they are broader in scope, in reality, being any prison entity whose geographical region is outside of the trustee's jurisdiction, and additionally offer extra safety in terms of asset protection. In both cases, maximum such establishments may be accessed over the internet, and there's no one to depart the country to open an account. I was talking about misconceptions about modern banking. If you wish to get more updates, you can subscribe to the video by hitting the subscribe button and liking this video.